Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical monthly support and demand area. In fact, what we can notice is that from here multiple times in the past, the market has created some quite strong rejections to the upside. Every single time the market tested its zone and immediately it rejected it to the upside quite aggressively. Now, what we can see is that the market is approaching the same zone. So there is a possibility to see a potential rejection to the upside once again away from this area. However, if we drop down on the most recent price action and we zoom in, what we can see is that the pattern that the market has currently been creating is that of an inverted head and shoulders. We can see, in fact, how we have the left shoulder exactly at this area. In fact, here is where the previous move to the upside was created, and we had the break below, creating the head. And at the moment, there is a possibility for the market to create a bit more short-term bearish price action, and then to create a potential right shoulder at this area. If we also look deeper and we check what kind of pattern the market has been creating on the most recent price action, we can easily notice how we have a strong impulse followed by this correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50%, 0.618 and 0.786 Fibonacci retracements all lining up exactly inside of this area. Now, this means that we have support at this zone, but it also means that the market has the possibility to go a little bit deeper into the support before then getting rejected to the upside. So there is the possibility, by looking at the market here on the monthly time frame, to see a bit more short-term bearish price action and then to see a potential rejection to the upside. Going down on the weekly time frame, what do we see? Now, from a weekly standpoint, what we can notice is that the market has just created this weekly M pattern. In general, after the creation of an M pattern, there is very good probability of getting our rejection to the upside for the completion of the M pattern at the neckline, which is the previous support turn resistance. So also here, the weekly time frame seems quite bullish, with the possibility of a potential rejection to the upside away from the support that we have previously identified on the monthly time frame. However, the problem is that if we go down on the daily time frame, we can see how from a daily perspective at the moment, there is bearish structure. In fact, this market is currently in a bearish trend on the daily, because we can see how it has been creating lower lows and lower highs all across that zone, with the new lower low being created here. So there is a possibility to see yet another lower low being created before then getting rejected to the upside, essentially for the completion of this daily impulse correction and impulse pattern to the downside, and then to see a potential rejection to the upside away from the area, completing the weekly M pattern and also completing a rejection to the upside away from the monthly support that we have identified at the beginning of the video. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for the euro, we can see how with the last reports, net positions have indeed been decreased. We went in fact from having 152.3k net positions all the way down to 88.7k net positions, showing a strong decrease of the net positions. And keep in mind that all currencies on the spot are traded against the USD. So if we're looking at the data for the euro, we're actually already looking at EURUSD. So what we can see here is that institutions with the last reports have been moving to the bearish side of EURUSD. And in fact, the market has indeed been trending lower because institutions were shorting EURUSD. And by the way, before we continue with analysis, make sure that you go and join my free Telegram channel so you never miss new updates. I share everything there, so make sure you go and check it out. Now, as I was saying, from a daily perspective, as institutions are still positioned to the bearish side, there is the possibility for the market to reject this previous daily support, turn resistance with one last rejection lower before then getting rejected to the upside. So I wouldn't be surprised to see one last push lower before then getting a potential move higher. And we can also notice that from a pattern standpoint, since we have an impulse and correction, if we want to measure the correction, we have to take Fibonacci from the high to the low of the impulse leg, and we can see how in this area we have the 0.32 and 50% retracements lining up exactly with this previous support and resistance, creating a confluence of resistance, inside of which there is the possibility to see a bit more institutional shorting of EURUSD, which at that point could push this price lower. So what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and identifying early shifts in a trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish market to an intraday bearish market, at that point I wouldn't be surprised to see a potential move lower, completing this daily impulse correction and impulse pattern to the downside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I'll see you in my next breakdown.